Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so here, this is pre-market prep for Tuesday, April 1st. Happy April Fool's Day. Be a little careful today. It's a tricky one. But anyways, gonna dive into the charts here, beginning with, as always, the UVIX, which is the 2x long VIX futures ETF, and it currently, or actually, yesterday closed at a price of $37.24, being down about 0.6% on the day, but it did hit a nice high of $42.90, but now trading in the pre-market about 4 cents higher than where it closed at. And so looking at the chart here, a couple things I want to go over with this. One is that 42.90 does look like it kissed this light blue downtrending level, which has been this channel that the UVIX has been trading in since it had the big move on August 5th. It's really just been consolidating in this downtrending parallel channel based on these 3 pivot points that you can see there. And so I am wondering if that is going to be the top for the next couple weeks or so, or if we might be breaking out above it in the coming days. Tomorrow, April 2nd, there's going to be some tariff news, so there could be a spike in volatility. But we could also see this cool off. It doesn't always, have such massive moves, and whenever it does, it tends to be followed by some smaller moves to the upside. So that is what we might be seeing in the coming weeks. And then also something that I just noticed right before recording this video is I like to make these boxes about 10 trading days long or 2 weeks, because I have noticed that the UVIX does tend to go up for about 2 weeks, down for about 2 weeks, and so on. It's not always exactly 2 weeks, as this was about 13 trading days, I believe. Let's see. Yeah, 13 trading days, and it went up, by over 100%. So a very nice trade there. And then this red box here was, I believe, exactly 2 weeks. So 10 trading days there, came down about 45%. And now we are, of course, seeing this bounce to the upside. And looking at the chart before open, before recording this, I was noticing, hey, this green box is a little bit wider than this red box. And so if I do look at that, it is actually 13 trading days long. I put it to the end of next week, which is going to be April 11th. But actually what I want to do is adjust that to be 10 trading days long. So I am just going to move this over here. And so that is kind of what we are looking at here. From that bottom, should have just done this when I had the measurement tool out, up about 50% from those lows, so a very nice trade. As I had mentioned, I had this alert here at around $28, and we didn't hit it. We came down to a low on March 25th of 28.67, so I missed it by the bottom there. But this has actually been, something that, I, of course, have been tracking for quite some time, kind of noticing these ups and downs. And something that I think I need to do, it's not super exciting, is just, place buys. When we are at the end of the 2-week red cycle, because I think it can be a really nice way to make, 20% or so. And it's just, it's not based on a company. It's not, it's just the volatility index, the UVIX here. And so, yeah, I think that's something that I am going to be doing, just kind of setting some cash aside for the next time that we do get towards the end of the red box, which would be, around the end of April, mid to end of April. So I will be keeping an eye on that. But anyways, let's flip over to the 10-minute time frame here, just to see that yesterday really just came down, gapped up Monday and then faded lower. will be very interesting to see what happens. So this is the first, so the upcoming day, but on the second, there will likely be a lot of volatility around that tariff news. But maybe, it's already been priced in with this ramp up in the volatility and, kind of the drawdown in the S&P at 500 and whatnot across the market. We have seen a pullback. Maybe we are going to see a rally the rest of the week, and that would, of course, coincide with a pullback in the UVIX, as we did bump into that resistance, and we also did open above but closed below this purple downtrend, which is based on really just the pivot point, the pivot high from November 20th, and then just getting an intersection over here on January 13th. Did break above it multiple times here now, but did ultimately trade below it. So we'll have to wait and see. But anyways, looking over at the VIX just to take a real quick peek, did close yesterday above $20 a share. And I should mention, this is the Market Volatility Index, or the VIX, closed at a price of $22.28, being up 2.91% on the day, but did get rejected, did pull back over the course of the day, opening lower than it closed. And it does look like it got rejected from this light blue uptrend that I had drawn here, was acting as support over here before turning into some resistance. Now it looks like it's resistance again, and we also do have that orange line at 23.76, which was the wick high on September 6th, so a month after that massive peak in August. And it was resistance the following months before getting some fake out breaks above it, but ultimately trading lower. I suspect we will be seeing a pullback to below $20 a share. Maybe that happens before the tariff news, but also maybe that happens in the second half of the week. So good to keep an eye on that. But anyways, let's look over at the SPY. This is the S&P 500 tracking ETF, which closed yesterday at a price of $559.39, being up about 0.67%, but down about, $1 or so in the pre-market. So we'll look at the 10-minute time frame in just a minute. But I did want to point out, I talked about this yesterday. We do have the 618 here. The 1618, which is not the extension, but it's the 1618 level from this Fibonacci retracement, going beyond the 100% to the 1618. And it does look like we got kind of a double bottom there, a wick lower, an open lower than what we were seeing over here, but then it did close higher and actually closed above this kind of double top level that I had marked over here at a price of $558.38, so closing above that. So looking nice there. And also it does look like we got a kiss of that green uptrend there, hitting a low yesterday of $546.87. And so that green uptrend is based on the lows from April 19th of last year, as well as, of course, August 5th. So two pretty important days there. Actually, I don't know the importance of April 19th, but I know it's come up in other charts right around 420, an important date there, of course. But then, August 5th, that was a historic day in the market, in my view. So those two pivot points we have retraced to that level, forming this double bottom. I also did, though, suggest in yesterday's video that we could be seeing, this be a bear flag play out, and that would suggest a price returning to 513, potentially approximately corresponding with the lows over here that were hit, right around August 5th. And some resistance over here in March. So there is still quite the possibility that this does head lower. We also do have this gap down here at around $530. So good to be prepared for the downside. But currently, right now, what we're seeing is what I suspect will be somewhat of a bounce. But of course, with the second being tomorrow, that tariff news, there could be some volatility, and maybe this does actually break down below these levels. So good to be cautious of that. And then just thinking about, this price action returning to the same levels over here and just considering the volume. The last time we had a volume as high as it was yesterday on the 31st, which was 95 million shares. The last time was over here on March 10th, which was 99 million shares traded. And so, yeah, I think it's good that the volume was higher when we got to these levels than it was over here on March 13th, 74 million versus that 95 million. So that does make me think that, with the volume stepping in, buyers stepping in, and that could be a double bottom trend line support there, that would be suggesting that we could be rallying, potentially getting back to, from current price, getting back to the highs here, which would be about a 2 to 3% move to the upside, and from the bottom, that would represent about a 5% bounce. So let's look for that. Hope that it does happen, but also, like I said, be prepared for the possibility of downside with that gap around 530 and 513 being that 100% Fibonacci extension there. But yeah, let's quickly switch over to the 10-minute time frame just to see what price action did yesterday into the after hours and pre-market. And so we can see it actually from the pre-market yesterday, saw that gap down, panic at the start of the trading yesterday. The first half an hour really looks like it did pull back some, but got a very nice bounce there. And so from the lows of yesterday to the highs, went up about 2.5%. So that's, pretty excellent if you were keeping your cool and kind of expecting that, there's a little bit of panic there, an overreaction to what's going on. And so, yeah, very nice swing there. Did hold the majority of those gains into the after hours and pre-market. But of course, like I had mentioned, being down by about $1.50 right now, trading around $558. So we'll have to see what happens into market open and if the rally does continue. But then just real quick, let's look over at the SPX. This is the S&P 500 index, just to get like a little bit more proper view of the S&P 500. And we can see that we did get that retracement to that 1618 there at around $5,542.10. And I should note that the SPX did close yesterday at a price of $5,611.85, being up about 0.55% on the day. And I have to say, going over the SPX, I'm getting better at reading big numbers fast. But we can see that the low from yesterday was at a price of $5,527.91. That was the open. Sorry, that was the open, the low. I'm like looking at over here, the number here. It's not correct. $5,488.73. And that does look like it very beautifully tested that green uptrend there. Which, if I do take a step back, also just like the SPY, does correspond with the low from April 19th, as well as that gap down low level from August 5th. And so we are at that, historic level of support. I suspect that we're going to get a bounce. I suspect that the April 2nd tariff news, any April Fool's pranks played on us today, I suspect that we will be going higher. And actually, I'm kind of wondering, let's see, get the doodle tool out here, if maybe we could see a little bit of a W pattern there. Don't necessarily think it's going to get that high. Who knows? Tough to say. The first level that we need to get above is around $5,790, getting back to the highs here. But yeah, that's a nice little W there. It would be nice to see it price going up. But we'll have to wait and see. But now let's move on to the next one on the list, which is, of course, going to be Bitcoin, currently trading above $84,000, about $84,500 there. And that would, of course, mean that we have, let's see, I'm just going to remove that doodle there, filled this CME gap. I unfortunately didn't get a fill on my, let's see, $81.5 thousand order. Price did go lower than that, but just the spread didn't get a fill, so that's kind of unfortunate. But it's really no big deal. And I believe this green line here was the CME gap from the week before. I'm just going to delete that so we don't have clutter there. But yeah, I mean, we are looking like we are at resistance at this downtrending red line, which does correspond with the all-time high, I believe, going back to January 20th at around $109,000. Got some wicks above it, but then just looking at the open from February 21st, that's how I draw that downtrend. Did get a test, a pierce, or not even really a pierce, a kiss of that level on March 2nd. And did get, kind of a fake out break above it, but now at that level. So, it is kind of, a tense level to be, buying at, trading at, because there is some resistance there. And also just above us, $86,000. I'm not sure exactly what that corresponded with. I think I had a Fibonacci retracement, maybe the 382 around that level. Not exactly sure, but that was a level that I had noted, and so maybe that does act as resistance. But if we do blow past 86,092 is going to be the next very important level. Had acted as a lot of support over here. It was a very nice level to be swing trading off of, getting 15% swing there, 11% here, and 17% there. And then last but not least, about 7.5% there. So yeah, I mean, a very nice level that was acting as support. Then it flipped to resistance over here. And so if we do get up to 92, I suspect we might be getting rejected. And if we do move up, what we might be looking at is maybe a move up there and a rejection to see if that downtrend then holds as support. But I should note that, something that was brought up on X is, let's see, I'm just going to pull up some notifications. I do have some from, let's see, where is he? I'm looking for Il Capo Crypto. Let's see. I don't know where it's going to be, so I'm just going to search Il Capo of crypto, and so we can see here he did have a recent post from the 28th, and basically he's just suggesting that price could go up to around getting above 92,000, kind of like what I had just doodled, but I wanted to delete it because I thought that what he's shown here would suggest that we're getting a rejection and then getting back into the 60s. I would be so excited about that to buy the dip there. Yeah, but maybe that doesn't happen. Maybe he's wrong about this. You never know. Did like that already, so feel good about that. But yeah, so basically what he's suggesting is a move like this and then down to here. So we'll have to see if that happens. If it does, I'm ready to dip by at 75 and 72,000. Got $10 limit orders there, nothing too exciting. But if it does come down to those levels, I would most definitely be picking up a lot at 69,420 just because it's a fun number and a great discount in my view. But if we do get up to around 92,000, maybe it would be a good idea to pick up some BITI. This is, of course, the ProShares Short Bitcoin ETF, which did, looks like, fill this gap up here from, let's see, a couple weeks ago. Maybe I don't want to have that up there, or maybe I do and just make that solid because that gap has been filled. And yeah, actually, I don't think that that level is really marked that well. Let's see, the close from March 18th was 2640, and it looks like I've got that at 2644, so maybe I'll just adjust that to be right there. But yeah, I mean, if we get back up to, let's see, going back to the lows, really, yeah, so the lows over here around 20, then maybe it would be a good time to pick up some of this, because as Bitcoin goes down, you could be making 30, 20, more than 20% on this. So yeah, just something to consider. But I'm going to wait for these retracements to get hit. So as Bitcoin goes higher, if it does, the BITI here would be going lower. And I should note that it did close yesterday at a price of 26.28, being up about 1.4% on the day. But looking like, maybe it's getting rejected there, which makes sense because Bitcoin, as we just went over, is up. But anyways, let's now switch over to Ethereum. This is trading currently still below 2,000, below 1,900. So still looking like, in my view, a pretty good discount, but we could, of course, be heading lower to around 1,500. So for me, I would be looking to get a lot of Ethereum down there, but just for the time being, doing my normal $10 DCAs, hoping to eventually accumulate one entire Ethereum. But if that never happens, no big deal. But if it does, I'll be stoked about that. But anyways, not going to spend too much time on this. Just to move on to uranium, ticker symbol URA. This is the Global X Uranium ETF. Closed yesterday at a price of $22.92, being down about 0.78% on the day and bouncing to be above $23 in the pre-market. And so, yeah, just like the other stocks, the SPY, whatnot, it does look like we could be putting in a bottom signal here with a hammer candle, big wick to the downside, closing at the top there. And that is kind of like a fake out break below this green uptrend. So I would say this seems like we might be seeing a rally from current price getting back to that yellow downtrend. That's about a 10% move to the upside, but maybe we get rejected around that 786 there, around 2450. As that was an important level in my view on the way down. Maybe it is going to be some resistance on the way up, so we'll have to see. But yeah, I would really like to see it doing something like this over the course of the next, couple weeks or so, month of April. So we will have to see. But anyways, that's pretty much all I wanted to cover in today's pre-market prep. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more pre-market preps and videos like this. Thanks a lot for watching. Have a great day. Bye, guys.